Hello and welcome. My name is Andrew Thake, and I'd like to welcome you to today's mining pitch battle, where miners pitch investors for $1 million, or 1 million virtual dollars, I should say. Before we start, a quick reminder of the rules. Each mining company will have 3 minutes to state their case, make their pitch, and ultimately convince investors why they should risk 1 million of their money by investing it with their company. Today, we are covering a wide variety of metals and opportunities. Keep in mind, management, projects, economic viability, share and or capital structure, jurisdiction and markets are all important factors in selecting the right opportunity. However, the most important component of any public or private entity, for that matter, is the skill set of the CEO as a presenter. At the end of the day, it's a pitch. In this business, we are all salespeople. Talk to us, inform us, charm us, and convince us. After each 3-minute presentation, we are allowing 8 minutes for the panel of investors to question each CEO. I'll just briefly introduce our 4 judges. They are, in no particular order, Chen, President of Chen Asset Management, Michael White, President and Chief Executive Officer of IBK Capital, David Street, Principal of Tembo Capital Management, and Michael Colligan, Partner of Blue Lakes Advisors. And after all the presenters are pitched and being grilled by the panelists, I'll be coming back to the 4 investor panelists to make their choice and cast their vote for the $1 million. So now, without further ado, if I can just ask Mr. Mark Child to go and get his slides up and go and share them on the screen. Are you ready to go, Mark?
Yes, I'm ready to go. Can you see those?
It's a slight delay. It's just give it a few seconds. And Mark, your slides are up. So if it's all good with you, sir, I'm going to start your timer now.
Okay, thank you for listening to this. This is the entrance of Minalandia, our project's in Nicaragua. We built this road. It's the entrance to the mine site. This is our disclaimer. So Minalandia is a fully permitted project. We've got 2.4 million ounces of gold, and we've permitted 3 pits. And you can see the outline here in magenta of those 3 pits. So everything inside this purple line here is fully permitted for extraction and for construction. So we can build the plant, the tailings, the waste dumps, all the infrastructure is fully permitted. So it's a main selling point of our project. Underneath this, there's another 1 million ounces, which in my mind is de facto permitted. The government's going to permit open pits. They'll certainly do the underground underneath it. So the highlights, it's the best address. Nicaragua is the best address for mining in Latin America. We own 100%. There's no free carried interest. We have direct access to the ministries. When I met the minister in November last year, he emphasized that the government supports the mine, the ministry supports the mine, the minister supports the mine. What help do you want? That's brilliant to hear one-on-one with the minister. The government is targeting doubling gold production in Nicaragua in the next 5 years. It's already the biggest export, and we're a key part of that. We can move the #1 export by 30%. We've got tax incentives, which we just imported a mill on, and we've got great infrastructure. We can drive to the project on a tarmac road in 2 hours, and we have grid power through the project. So no roads we've got to build for a long time. The project itself, just a quick summary, we've got 2.4 million ounces of gold. 1.1 million of that's permitted in the pits I showed you on the diagram earlier. We've got the permits to construct. We've purchased all the land. It's about $4.2 million. We've purchased a mill, which has now all arrived in the country, a brand new SAG mill from Metso in Finland. We've got a massive land package. We think we've got another 5 to 10 million ounces gold district potential, very high grade. A PFS was completed. A PEA was filed as an update in November last year. That showed 150,000 ounces of gold per annum for 9 years, a net NPV of over 400 million, IRRs at 54%, 12-month payback, which is fantastic, and we can produce 1.4 million ounces over the life of mine. Reasons to invest: very few projects around the world in the gold space are fully permitted and shovel ready, construction ready. It's completely de-risked. There's no reason why this can't go ahead. There are no fatal flaws in the metallurgy, the hydrology, got very low all-in sustaining cash costs in the PA for the open pit of $850. We've got a feasibility due in 2 months' time. The capex of plus or minus 15.
I think your 3 minutes. Sorry, Mark, for interjecting. Your 3 minutes is up, Mark. But that was an absolutely fantastic presentation. So if I can ask you just to go and take your slides down, so we can just now throw it open to questions. Without sort of like further ado, which of the investors would like to ask the first question? And please remember to unmute yourself before you ask your questions. Who would like to dive in first? David?
Yeah, okay, sure. Thanks, Andrew. Thanks, Mark. Could you give us a bit of a feel for how you think about financing of the project capital costs from here, and what your plans are on that front?
Yes, the upfront capital cost of the project we're estimating at the moment is around about $125 million for stage one. All options are open on the project. We looking at the classic 60-40 debt to equity. Regarding the debt component, we realize that that's relatively small in mining terms. We think that's more likely to come from private equity debt, gold loans, or a possible stream. There's also regional development banks like the Bank for Central Economic Integration that will lend to the project. And the equity component, that might be private equity funds, or our brokers have to sort that out.
I think there was a question from Mike White. Mike?
Yeah, I'm just wondering what, I don't think I saw it. What are you looking at in terms of production, annual production, for how long?
50,000 a year.
Sorry, what was it?
150.
150,000 a year for how many years?
We've got a 9-year mine life of 150,000 ounces. That's on a PEA we filed in November.
Okay,
we're going to do that in 2 stages. So our stage 1 is a minimum capex, maximum cash flow. We'll put up the mill we've purchased. We'll produce 100,000 ounces on that. We can expand that out of cash flow by adding a ball mill. That's the current plan.
Okay. And so what's the ramp? How many years is the ramp to get to one?
Well, if you speak to the EPCM managers, they say if this was in Perth, they'd construct it in 9 months if everything's on site. We've got the mill in the country now, so I think we can be 18 months construction period.
18 months. Okay, and what's the all-in cash cost?
The all-in sustaining cash costs on the open pits about $820 in the PEA.
Okay, thank you.
I saw Chen Lim. I think you've got some questions for Mark.
Yeah, Mark, can you remind us of the NPV of this project?
Yes, on the PEA, we had 2 scenarios. The biggest scenario, it's $418 million US compared to our market capitalization of $60 million today. That is the largest scenario of 150,000 ounce per annum. If we exclude the underground and we just do open pit only on the inventory we know today, the NPV at $1,700 gold, I have to emphasize, is about $325 million US.
Okay, great, thanks.
Perhaps I can bring in Michael Colligan of Blue Lakes.
Mark, hi, how are you doing? Do you have a standstill agreement in terms of the commercial terms with the ministry? And if so, how long does that last for?
Well, a standstill agreement under the UK takeover panel is that someone can't make a hostile takeover for you. How do you mean?
No, I mean in terms of government terms. So they won't change tax rates or royalties or anything like that.
No, I'm afraid we don't. There's no one-on bilateral agreement between Condor and the government on changing the mining law. Only thing I could look back to is the last 15 years I've been going to Nicaragua. They haven't changed the mining law. You still get concessions for 25 years, which is very long. You get the exploration concession and the exploitation concession wrapped up in one concession package. So, which is unusual because quite often you have to get the exploration only, and then maybe they'll give the extraction or construction permit. But the whole thing comes in one. Under the mining law there, what they do is they charge you 50 cents per hectare in year 1. And if you hold it for your 10 years, by the time you get to year 10, you're paying $12 a hectare in tax every year to the government. So this year we'll be paying over $450,000 in taxes. So there is a pain of holding on to concessions for too long, but it's great that you get them for a long time.
Right. Okay. Thank you.
Do you have any, Mark, do you have any debt on the books today, and who owns your stock?
We have no debt on the books today. I'll preempt the next other question. Are there royalties? There is a 3% royalty to the government in Nicaragua. That's under the mining law. There's 30% corporation tax. We inherited a royalty by Royal Gold on the project, which is on about a third of our project area of 580 square kilometers, but that does cover the existing, basically the bulk of the existing mineral resource. In terms of who owns the stock, the directors, actually, myself and Jim Mellon have 22%, which I think you should look as a big vote of confidence. Not many firms of this stage of development, completely de-risked and shovel ready, have got the directors with that shareholding. And in addition to that, we have somebody you might know called Randy Martin through Nicaraguan Milling Company. He's built 5 mines in Central America, has a 6 or 7% shareholding, and the Swedish office has just over 3%. Otherwise, we have 700 shareholders. There are a number of institutions, but they're quite small institutions, as you can imagine, at our size. You have $500,000 to $1 million in the company.
Thank you.
Do you have any mining project nearby that you may have synergy?
Yes, we do actually. That's a good question. There's a mine called El Limon, which is 1 hour drive away, and that has a capacity of 1,500 tons per day. And there's another mine called La Libertad, which is about 4 hour drive away. Those are both owned by Calibre Mining. We did actually try to buy both those mines off B2 Gold, but we were unsuccessful in that, and Calibre Mining ended up buying both of those mines. So the good thing is that there's a mining community in Nicaragua. My current general manager is the former mine superintendent at the El Limon mine, an hour away. He's developed 4 open pits there, or 6 open pits and tailing lifts. So we've got a great staff on site, and quite a few of those have actually come from the nearby mines to work. The Nicaraguans actually, it's quite an opportunity for a mining engineer, civil engineer, hydrologists, architects. We have one of the main architects who worked there for 10 years at the nearby mine. They want to be part of the next big new build mining project in the country, and that's this mine. So there's a synergy in that sense. There's also spare capacity at La Libertad mine, which is running at only 50% capacity. The nameplate's 6,200 tons a day. We could perfectly toll treat our ore over to La Libertad mine. That would we have actually put proposals to Calibre Mining. We're not under a CA with them, so I can actually say that, but I wouldn't want to go into too much detail about it. But that could put us into immediate production with no capex, and that we could easily do 1,000 tons a day or 40,000. 1,000 tons a day or 40,000 ounces of gold a year in toll milling. And at these gold prices, there's plenty in there. At a head grade of 4 grams, there's plenty in there for everybody to share.
And that takes us to exactly 8 minutes. So thank you very much, Mark, for enduring some tough rounds of Q&A from our investors. And we wish you obviously the best of luck. And we'll obviously find out later as to whether you've won. So without further ado, let me invite the second contestant to go and share their slides on the screen. He is Brad Rourke, President and Chief Executive Officer of Scottie Resources. Brad, if your screen share is there and you're able to share the slides with us.
This one, yeah, sorry, this one.
And I can just see them. Yes, your slides are up there. So if it's ready, if like you're ready to go, Brad, your time starts now.
Wonderful, thank you very much. I'll start my timer so I know where I am. Wonderful, thank you for being here. I'm Brad Rourke. I am the President and CEO of Scottie Resources. We're an exploration company, so we're in a pitch battle. I've got a lot of developers here, and so we're not comparing apples to apples, but we're a pure exploration company situated in northwestern British Columbia in a jurisdiction known as the Golden Triangle. I'm sure most people have heard of it. And what I'd like to point out here is there's an awful lot of activity happening, including my neighbor to the south, who I'm competing against, who's developing Canada's next mine. We're happy to be there. Of course, we've had some large transactions in the area as of recently, whether it's Newmont coming in and buying GT's gold or Newcrest. But what I'd like to show here is you got SK Mining, you've got Skeena Resources and Tudor. Those are exploration stories that if you look back to 3-4 years ago and the potential of what something can become with large drill programs, but they've gone roughly from a $30 million market caps to what you see today. So there's a lot of torque if you're looking at exploration. And so we'd like to make the case that we'd be the next one that people should assume that from an exploration point of view, that we could garner a lot of attention because we've been having a lot of success with a drill bit. So we're in the right jurisdiction. We've assembled, I've done over a dozen transactions over the last 5 years. This is the land package that we've come up with. We're nice, comfortably in between Ascot, and then of course, lots of borders we share with the new Newcrest deal. So we're happy to be in the right jurisdiction. We have a very large land package, but most of our work is just up and around the past producing Scottie gold mine. We've progressed along nicely. We just completed our 3rd year of drilling, and we've ramped up from a 2,000 meter to a 7,000 meter. And in face of a challenging market, we did 14,500 meters in 2021, of which we started to release some of those results. And as you can see on here, we're displaying some of the highlights of the results, but we're very, very excited. We're working on a bunch of zones, but I'm going to just talk about the one zone that should be enough to get people excited with the low market cap that we have right now. And that's going to be the newly discovered Blueberry zone. This is the result here when you look at this long section, a very near surface, very high grade gold. And if you understand that that is from 0 to about 650 meters worth of strike, all the depth potential in the world and a long strike, that's only 7,500 meters of drilling, including finding the deposit. So I think we're in really good shape. And if anyone really wanted to take the time and go, if you can find that kind of grade with that little amount of drilling, I think we could deem that we're successful. I'd like to point out you don't see any.
Brad, yeah, sorry, I'm sorry to interject. Your 3 minutes is up. That was a fantastic pitch. You left us definitely wanting to go and hear sort of more, Brad. If I could just ask you just to go and take your slides down, and then we'll go and throw it open to Q&A.
Sure.
Brad, you still there? Okay, great stuff. If I can now throw it open to questions. I think this time, if it's okay, I'll go to Chen first, followed by Michael Colligan. Chen.
Hi, Brad. What's your plan of drilling this summer? I know you have the summer drilling season coming.
Right. That's a good question. We've been ratcheting up, and as we've had more and more success with the drill bit, I'm in a situation now where I didn't have or confidence in drill targets. We've still yet to put out some more news to get that out into the market. I have no shortage of drill targets no longer. What I can tell you is I will not do a meter less than we've done last season. We're in a challenging time in the market right now, but I could easily do 30,000 meters of drill targeting with the evidence that we found now. I think it's a game time decision, Chen, but you won't see less than 15,000 meters. And I would suggest 85% of those meters will be on the Blueberry. There's no helicopters involved. We're getting the most bang for our buck. It's just consistently hitting 78% of our holes are hitting along that contact. We're no longer chasing a vein like we are at Scottie. We're chasing a contact, a lot easier to follow, and been consistent, showing a lot of consistency. So I think, if the market changes, you're going to see more meters, but you will not see less than 15,000 meters this season, regardless of the market.
Yeah, I saw some impressive results you had for last year. So when are you going to release all of their results? What's the schedule?
I think you're going to see consistent news releases from us. We've already put out, I believe, 5 on our drill programs. We still have a series of coming, and you're just going to see them regularly. Our plan was to get those all out before PDAC, but now that's delayed. We're just going to continue get that news out we're really working on a bunch of visual charts that I cannot put out there quite yet because it has to incorporate some of the information that we'll get out to the market consistently here in the next 6 weeks.
Okay. If I can move on to Michael Colligan.
Yep. Okay. Three-part question. Number one, what is your market cap at the moment? Number two, how much work will be necessary to get a resource out of these very interesting drill results? And number three, do you have an airplane that goes with that propeller behind you?
No, but it's a neat little thing. I've been carrying that thing around for about 20 years. First part of the question, I haven't looked at the ticker today, but I'm just over $30 million market cap. The second question, sorry, we're talking about a resource, I think.
Yep.
I think for us, we've always stated, we're going to show a pathway to 1 million ounces of high-grade gold. We see the light at the end of that tunnel. Now, I'm going to forward look some statements here. I have a high degree of confidence at the end of 2022. It's just a mathematical equation for us where if we decided that we wanted to come out with a resource, we'll be able to just show how much we need. We will have a very good understanding internally of what that will mean, because we're working with dilution and that many drill holes. What I would like to say is also, if we try to do a resource right now, because we have no clue how big this blueberry could be.
Yeah, I understand.
We really could limit ourselves by, we
you don't announce too early. I understand.
That's
I understand.
right.
I just wanted to have a time frame. So during this year, you expect to have a maiden resource?
I expect to have an honest story that I can tell you after this next drill program.
Okay.
If we choose to do that and give you the metrics on how much that would cost us.
Fine.
Yes.
Okay. Thank you.
Brad, what on the topic of costs, how much does it cost to drill where you have a road, and how much does it cost to drill where you don't have a road? All in.
Well, I have the exact answer for that, and I know that question completely. So a lot of the drilling we've done is heli assisted, and we've been able to keep that about $400 a meter all in with the helicopter assisted stuff. Blueberry, there's no pad building, there's no helicopters needed. We just push those drills around with bulldozers. We figured we tried to split that out. We're about $325 a meter, and we're talking all in. That's including toilet paper and food. So it's we think that we've done a heck of a job manage that money well. And like I say, we're getting all the bang for a buck. You're going to see most of our meters on Blueberry this year, and try and keep those costs down and just get the most meters per dollar we can.
So what do you think this 15,000 to 30,000 meter drill program will cost you for this season?
Just under $8 million.
8 million. Okay. Thank you. And to get to 1 million, what do you think the budget is for that? 1 million ounces in the ground?
Oh, I think well, again, it was such forward looking, but with that 15,000 meters, we see the light at the end of the tunnel. I'd be very cautious to always under promise, over deliver. Mm-hmm. We have a high degree of confidence, and that's more of a technical input, but we welcome people to come have a look at what we've done. I just think I can give a real honest answer after one more drill season. And again, we're still trying to be a standalone project, and there's so much more potential even than there was last year. So game time decision, but unless we can come up with 1 million ounces, we're just not interested.
And then perhaps I can bring in some questions from David Street.
Yeah, thanks, Andrew. Thanks for the presentation. Just a couple of quick ones. Could you talk a little bit about the infrastructure in the area? Obviously, there's a lot of mines up there, and also a little bit maybe about First Nations engagement to date and who you'd be dealing with. Sure.
So we are blessed at Scottie, as you know, we're just up the road from Derek's Ascot project. We lack nothing as far as infrastructure. The reason I got involved is I've raised my family just outside of the Golden Triangle in a little town called Smithers. But when Peridium was building that power line, we identified a past producing gold mine and that power line. We have the port down in Stewart that there's concentrates are currently being shipped out of. So there's nothing we have on our wish list for infrastructure. We can drive to our project. There is power there. And in fact, we have a permit that's associated with Scottie. We're not going mining, but much like Barkerville, we are in the possession of a mining permit that would have to be amended, but that might be a quicker path than other people that may or may not be interesting. We don't try and focus on that. As far as First Nations go, because I've lived most of my life in the area, I know everybody personally, whether we're in Nisga'a territory, so to speak, at Scottie, but if you're talking Tahltan, Gitxet, I mean, these people, I've coached all their kids in sports. I was basically retired in Smithers for about 10 years, and I'm just a member of the community. Not to take anything for granted, because that doesn't mean just because I know the people, but so far so good. We're blessed to be in Nisga'a territory. Very, very easy organization to work with. And I got friends for 30 years that come from all those communities. So I think that's a good point for us, but I don't take that for granted either. It's, I'm just happy to be there, but it's, I'm a phone call away from anybody. I get free fish. And, that's just, and that's a sacred thing too. I mean, it's a real important gift, but I've been in the community most of my life. And so I think we are good. And again, my relationship with the Nisga'a Nation is fantastic.
And I think that brings us just up to the 8-minute mark. So thank you very much for that, Brad. I've never ever have come across free fish as being a reason to go and invest into a mining company. That is actually definitely a first.
Well, if you understand the culture, it is a big thing. It's just not a funny thing to say. So, yeah.
And anyway, thank you very much, Brad. It was a very enlightening presentation, a great sort of Q&A there. I'd like to invite our next contestant, Laurel Sayer, who's President and Chief Executive Officer of Perpetua Resources, to go and share her slides on the screen. Laurel? Oh, they're already up and ready. So if you are ready, I will hit the start button for your 3 minutes now.
Great. Hello, I'm Laurel Sayer, and I'm CEO of Perpetua Resources. And I'm going to share with you why our investment thesis has never been stronger. Perpetua Resources is unique because we bring solutions. We have a large, low-cost and high-grade open-pit gold mine. We will offer the only domestic mine source of the critical mineral antimony. And we will use mine development to fund restoration at an abandoned mine site. I've been a lifelong advocate for conservation and have dedicated my career to navigating natural resource policy decisions by bringing business and the environment together to identify solutions. We're proud to be permitting the Stibnite Gold Project in central Idaho as a modern American mining success story. So first, we plan to redevelop one of the largest gold projects in the country, which has 4.8 million ounces of reserves and all-in sustaining cost averaging less than $650 per ounce over the life of mine. Given our low costs, the Stibnite Gold Project has great economics with a 15-year reserve life and a payback period of less than 3 years. Second, the Stibnite Gold Project will also produce a valuable byproduct in antimony. Antimony is key for our national security, our supply chain resiliency, and it enabling America's low carbon energy transition. In fact, we've already committed a portion of our antimony to help commercialize grid-scale energy storage batteries for a low carbon future. Then third, the location of our project in an abandoned mining area provides an opportunity to rewrite the legacy that past miners left behind as we restore the Stibnite district and leave it better than it is today. Not only is our opportunity unique, but it is also the right time. Our company is trading at a significant discount to our project's value despite all of our recent achievements and exciting milestones just around the corner. We are gaining momentum as we enter the home stretch of the permitting process, and we expect our valuation to significantly improve as we meet major permitting milestones over the next 18 months. At Perpetua, we are driven by a bold vision to develop one of the largest gold reserves in the US and mine the only source of the critical mineral antimony, all while improving the environmental conditions in Idaho's backcountry. Now is the time to invest in one of the most compelling projects in the US, as it is set to unlock significant value for all stakeholders.
Well, thank you very much for that, Laurel. That was just under 3 minutes. So that was a fantastic and very, very well-timed summary as to why investors should invest in Perpetua Resources. Now that the investors have unmuted themselves, perhaps I can go to Michael Colligan this time for the first question.
Laura, this is a very interesting project you've got here, but you've had an absolutely dismal stock market performance. What was it that caused the break in your share price that brought you down to such a discounted level?
Well, I think overall, in juniors, the market is low anyway, and the valuations are down. But we are permitting in the US, and the US has a rigorous permitting process, and it has taken us, we're now in just finishing up our 5th year of permitting. But the reality is that permitting in the US is an average of 7 years. And we are now on the downslope of permitting, and we are able to advance that process in permitting. And I do see as we are going to meet our next few milestones in the next 18 months, you will see our valuation increase, and our stock price will go up as we meet these milestones that in the next few months.
Okay, thank you.
Okay. Perhaps I can go to David Street next.
Yeah, I think probably related to that, really. What's the current market capitalization of the company, and in terms of the permitting, obviously that's key to this project. What are the next milestones, and how long do you anticipate it might take?
So our current market cap right now is at 235 million. And our milestones for permitting is that we have recently, let me just walk you through to give you a little bit of context for that. In the NEPA process, we started the process back in 2016 when we filed our plan of restoration and operations. And the NEPA process is designed to be iterative. It uses data, scientific analysis, public feedback to help reduce potential impacts for the environment. And this process is working to make the project better. So we had a comment period in August of 2020. There were over 10,000 comments that were submitted to the Forest Service. 85% of them were positive towards our project. So we took those comments and we went back in and we did some refining to the project. We reduced the project footprint. The total volume mined could be reduced about 10%. The pit disturbance, we improved water quality, and we reduced water temperature. All of the things that the folks that submitted comments had concerns about it. Then we submitted that to the Forest Service. They reviewed it, and in July of 21, they came back with a schedule update where they felt like it needed to go back out to the public for comment. So in this quarter of this year, the supplemental environmental impact statement will go out to the public for comment. And then we will have a draft ROD at the end of the year, and we should have our final record of decision in the first half of 2023. So the next 18 months is we should see an increase in our valuation as we meet these milestones.
Okay, thank you very much for that. Can I next go to Chen Lin?
Yeah, hi. Can you tell us your capital position, how much cash you have, and then how much runway you have from now?
Yes. So we have, we raised last summer $57.5 million to help get us through the permitting process. So right now we have enough money to get us through to the final record of decision in 2023.
Great. So afterward, what's your plan to get the construction? How do you plan to build the mine?
Our plan is we should have, as we get our final record of decision in 2023, we will have some ancillary permits that we are already doing simultaneously now that we will have to finalize. We will go into construction. in 24. And we will have about 2.5 years to build the mine. And then we will be able to be in production in 2027.
Perhaps I can go and bring in Mike White.
Sure. Thanks, Andrew. Laurel, great presentation. Thank you. I was just wondering, can you expand a little bit on your team? Obviously, you need certain skill sets to navigate permitting, but then you're going to need certain skill sets to navigate construction and actually turning on a mine. And so, can you walk us through that?
Sure. We, our team right now is focused on permitting and to get us to that milestone. We did submit and we have finalized our feasibility study, and that was done a year ago, our technical work in that way. So we have a strong permitting team working with us, experienced folks that have worked in permitting in the US for decades. They've either worked in hard rock or in phosphate and are very familiar with the NEPA process in the US. We will, as we get closer to getting our record of decision, we will be looking at bringing on some construction expertise as once we meet these milestones in the next 6 to 8 months.
And what about the existing team? Just maybe a little bit of background on some of your key directors or advisors.
Our key directors, on our board, we have a gentleman by the name of Chris Robinson, who is former Newmont. We have a gentleman by the name of Dave Dicely on our board that advises us as well, legal, former Barrick. We have Bob Dean, who has a strong financial background with Allen and Company, and he's an Idaho native, came back to Idaho to raise his family. We have Jeff Malman, who is a vice president at Idaho Power, which will be providing our power for our project, but also has a very strong connection to politicals. We have a lobbyist out of Washington, D.C. by the name of Alex Sternhell, associated with the Democrat side of the aisle. We also have 2 Paulson representatives, Marcelo Kim and Chris Papagiannis.
Great, thank you. And just one very quick question. Where are you located? Where's the head office?
Where is our main office? We are here in Boise, Idaho.
Great, thank you.
Okay, we've got time for one more quick question. If so, I'll just go and chip in one. Who are your main shareholders?
Our main shareholders are Paulson and Co.
Yep.
And then we have Barrick has a small percentage, Sun Valley Gold has a small percentage. They're both under 9%. Don't have the, that's the major ones. Mm-hmm.
Okay, that is your 8 minutes. Your time is up. Thank you very much for that, Laura. That was a great presentation. And we wish you all the best when it comes to the judging, which will happen at the end of the next presentation. If I can just invite Derek White, President and Chief Executive Officer of Ascot Resources. Derek, if you'd like to go and share your slides on the screen now. And you would also want to go and unmute yourself as well, Derek. So, Derek, if you are unmuted, which I think you are now, your time starts.
Can you hear me?
I can hear you loud and clear, sir. So your time starts now.
Okay. I'm Derek White, President and CEO of Ascot Resources. Ascot is building the next gold mine in North America. Ascot is located in the area of where Chris is located in the where Brad is located in the Golden Triangle. The main features of Ascot are, number one, its people, because we're a very experienced team of engineers that have built many, many mines. This is not the first time we've done this. We do extremely well in looking for brownfield opportunities where we refurbish mines for a much lower capital cost than normal and in a much faster time frame. We're located in the southern part of the Golden Triangle, very close to the town of Stewart. There's 20 mines that are going into production at some level, from PEA to construction. Ascot's in construction. We are fully permitted and in construction, financed to build this mine. effectively by the end of 2022. In the Golden Triangle, which is an area that's geologically endowed with both copper and gold opportunities, there's only 3 locations that have mills. The Red Chris mine, the Bruce Jack mine, and our area at the Premier mine. During 2021, we have already gone through all the cost inflation and all the other things that people who are going into production basically are wanting to experience. We installed the ball mill and SAG mill in 2021. We made a decision to order these things in 2020. So we kind of beat the curve basically on fabrication. This is the main component of what's required inside our mill. And we got those installed on time, on cost, and we're able to basically start the major refurbishment of the mill. In the case of our geological endowment, our strategy here is to basically have a hub and spoke. So we have a centralized mill location right located in this area here. We have 3 mines that we basically take from underground. We have roughly 12.8 million tons, which creates at around 8 grams a ton, containing roughly 3 million ounces. In our reserves, we mine half of that over an 8-year mine life. We have the ability with underground, as we go underground, to convert at least half of that of the remaining 6 million tons. However, we've ran a modest exploration program and been very successful in the last year. We have a number of areas that are very close to underground infrastructure, which are not even in our resources. And in underground mining, you tend to actually go a little bit as you go. And so in the case of Big Missouri, we have a whole new area that we're planning in our mining called the Day Zone. We had our best drill holes to date north of the Premier and the Northern Light structure, where we hit an area of 7 meters over an ounce a ton. And we've had a number of successes to the west of both of the deposits. So from an exploration perspective, we have a lot of upside. In general, why would you want to be buying Ascot? This is a curve of the last 11 developers in Canada. And usually this curve takes over 4 years to get there. Ascot will do it in less than 18 months. We're 25% of the way up this curve. You re-rate against the index by 100% on average and up to 230% if you're quicker. Thank you.
Okay, thank you very much for that. Derek, that was absolutely bang on 3 minutes dead. If I can now ask you just to go and take your slides down so we can go and open it up to Q&A. And if you're able to take your slides down, the first person I'd like to invite to ask Q&A this time is Mike White.
Yeah, great, Derek. Great presentation. Thank you. Just based on that last slide, then, based on where you're at and where you're headed, where do you think your stock price is going to go? What do you see as a lift from here to when you're actually pouring your first bar?
Well, what we showed you on that picture was the real Lassonde curve. So a lot of people look at the Lassonde curve basically at the discovery premium that they get and then going into operations. But in reality, as companies go through development into production, it's kind of more of a squiggly line moving in an upward direction. On average, you would re-rate it 100%. But because Ascot has such a short development, because it's a brownfield site, we would hope to rate like the other people that have done it in less than 2 years, and we're talking first gold in 12 months. And so we would hope to be somewhere between that 100 and 150% against the index. And that would just be based on the actual reality. And all these other companies had problems, overruns, delays, permitting issues. But just in general, because the risk profile is changing so dramatically, investors like gold that you actually produce and make money on. And so, the faster you can get that, the better your re-rating is going to be.
Yeah, and just a follow on to that then, and you alluded to it, what are your potential pitfalls or delays in here? What keeps you up at night? What do you worry about?
Yeah, so we're suffering, we're the only people in Canada right now that are in construction. We're not talking about doing the permitting or making it. We're in the construction phase right now. We've completed 25% of it, and we'll complete the rest of it in a period of time. We suffered a major setback in the sense that we lost our clarifier and thickener at sea, and it went to the bottom of the Pacific Ocean in major storms. We've re-engineered that, and we'll bring that back in April, and we've delayed the project only by 1 quarter. So we're going to production basically in Q1 of 2023. Most of the mill is already built. So the major issues that we face are earthworks for a diversion channel and a water clarifier, which we believe are pretty minor risks. Most of the risks or cost inflation have been taken out. So really, for us, it's executing the last part of the project. And really, investors who would come into this story are last money and you're investing effectively in the very last part of going into production.
Perhaps I can bring in Chen Lin. Chen.
So Derek, what's your current market cap, and what's when you get into production next year, what kind of production profile and cash flow do we expect to generate?
Our current market cap is around $182 million Canadian. And generally, obviously, it depends on what gold price you want to use. We will ramp the project up over about a year and a half to over 2,500 tons a day to bring us to about 150,000 ounces a year. And, you know, depending on the gold price, you know, at 2,500 tons a day at full ramp up, we generate about 120 to 150 million dollars Canadian of free cash flow.
Okay. What's your cash cost and all-in sustainable cost?
Yeah, so we've reinflated all the cash costs, you know, basically to today's operating cost. In our feasibility study, we were about $765 an ounce, but with real inflation, we believe we'll be at just around $880 an ounce all in.
That's US, right?
That's US, yes.
Thank you.
David Street.
Yeah, I was going to ask a couple of things. Derek, you alluded to the team and things you've done in the past. I mean, it would be good if you could expand a little bit on other projects.
We've built so many different mines, you know, and worked in big and small companies. But just to give you an example, when we started Quadra FNX, we bought the Robinson mine in Nevada off BHP Billiton for $15 million. They told us we'd never start it up. We started it up in 6 months and it produced $100 million a year, and we grew that company to a $3 billion company. We did the same thing basically with Frankie. I mean, we've had a number of mines. This mine was owned by Boliden. We bought it for a very cheap price. It would typically cost $1 billion to build this mine. Bruce Jack was roughly $1 billion, which was built as Canada's largest gold mine. In 2017, we're going to be doing it for a little bit over 200 million Canadian. And so, you know, it's a story. I could get into a lot of different operations. We built copper, gold, silver, nickel, all kinds of different mines.
And could you talk a little bit about the upside? Obviously, the project's quite attractive as it stands.
Well, the Golden Triangle, as Brad earlier illuminated, is one of the hottest M&A spots on the planet. And you're seeing Newcrest come in and buy 2 of the mines here. Really, this is about infrastructure. Infrastructure is the key. The problem here is you have unbelievably well-endowed gold deposits. However, you're in the mountains and rivers and glaciers. It's a very, very expensive place to be. So our job is to get this mine into production, expand the resources which we have on our own properties, and then to look to all the other people within a 200-kilometer radius of us. You know, and I see Brad smiling there because we have the infrastructure. We have our own power plant. We have everything that we need to consolidate the lower part of the Golden Triangle. And you're seeing Newcrest do this in other parts of the Golden Triangle right now.
Perhaps I can bring in Michael Colligan.
Derek, quickly, can you walk us through the way you financed the building of the mine to date, and what sort of, if any, royalties do you have on the property?
And so the financing was basically put together with an equity package and a project financing package to fund a little bit over $200 million. And we today, at the end of December, have roughly $60 million Canadian and an undrawn debt facility of about $92 million. And so with the delays, because it's the indirect costs in these projects that go up. It's not really the cost of the mechanical, especially in a brownfield site. It's the indirect costs and the time delays that we have. And we need to finance probably somewhere in the neighborhood of another $45 million. We, on the royalty side, Boliden has a royalty of 5% NSR on 2 of the mines on the Premier project. And basically we can buy that back for $14 million Canadian at any time we want. We negotiated that when we did the deal. So we have effectively an in the money royalty option on this, and we plan to buy it back because we would pay them way more money than what we would do. We can use that as to potentially finance our gap. We can also go back to the equity market, or we could also look to our debt facilities. We have pretty strong big shareholders that are, you know, want to see this project go into production.
Or you could buy the royalty and resell it. And
we could as well. Agreed.
There's a number of different games you play.
There's a lot of options there. Yes.
Yeah. Thank you.
We've got time for one more question.
So what's your plan for the rest of the 45 million? When do you plan to raise it or get a combination of debt and equity?
Well, we already have debt and equity. So, at the end of the day, basically, we had to redo our capital number, which we just released a couple of days ago. We have a number of people talking to us right now. And, I think we have a pretty strong interest because there's not very many people at this far advanced, this close to production as we are. And so, we have enough money to keep financing, continuing the project. We would like to be fully financed and ready to complete the remaining sort of 9 months of production by the end of March 2022.
Yeah, you will not have trouble finding that money.
I hope not. Maybe some of you guys would like to invest.
Well, I think that neatly brings us up to the 8-minute mark, and we were now about to sort of like find out the answer to Derek's closing question there. So that was 4 fantastic mining companies. They were Condor Gold, Scottie Resources, Perpetua Resources, and Ascot Resources. I'm now going to turn to each of the judges in turn. As I said at the start, you have a hypothetical $1 million to invest. If you want to, you can split it into 2, equally into 2. Please don't split it into thirds because my maths is just not that strong. And then obviously the person with the most money wins. Firstly, I'm going to go to Chen Lin. Where would you like to hypothetically invest your $1 million? And why?
Okay, I'm quite impressed with Condor's presentation. It's, they have everything ready and trying to get into production. The only issue is the country. There's certain risks and then financing. And I like Perpetua as well. It just takes, next year to get the permit, and then you go into the construction. So it's going to be a little bit longer wait from investor side. For me, I'm just going to collect my paycheck because my printing share going to be taking over, going to be transferred at a nice premium. So actually, I've been to the Golden Triangle quite a few times. So I kind of like Golden Triangle area because there's a lot of gold there. If you spend enough money to drill, there's a lot of gold, one of the greatest place to find gold. And also the global warming, the glacier succeeding, so you can find, there are a lot of places that you cannot explore before you can explore. So I'm probably going to split my money into 2 of the Golden Triangle companies, 50-50 to Scottie and 50% to Ascot.
Okay, thank you very much for that, Chen Lin. Next, I'm going to come to Michael White from IBK Capital.
Thanks, Andrew. Well, typically I like to invest on the discovery side of the Lassonde curve, as it's been called, although I think it precedes him. But anyway, that's okay. I usually like to be on that because that's where you can get the most, I guess, return on your investment if you're a bit lucky with the drill bit. And I do like the Golden Triangle. So, Scottie, it would be one of great interest to us. Although, I got to admit, I'm also a gold bug, and I do believe that we'll see performance in gold here. There's just, I think, too many forces that are going to cause gold to finally shake loose of its current trading range and do better. And in that case, I want to be as close as possible as I can to ounces. And Derek, there with your mine going into production, very shortly, but also Condor. I just feel like there's a heck of a lot less risk, and it's almost like shooting fish in a barrel. And if I had to put $1 million into something, and like I said, normally I take on a tremendous amount of risk, but if I wanted to de-risk it a bit and just ride the wave of a correction in the value, as Derek has pointed out, I think you'll do more than 150%. But anyway, that plus the rise in gold price, which will kick that even higher, I think I could sit back and be very confident that I'll make a pleasant return on my investment by putting it into Derek's company. And so I think that's what I'm going to do with the full amount, $1 million.
Okay, that's going to be a full $1 million for Ascot Resources. Okay, yeah. Thank you very much for that, Mike. Perhaps I can now move to David Street.
Yeah, thanks, Andrew. Quite a difficult decision, to be honest. I think they're all pretty interesting companies in different ways. all with good prospects. And I agree with Mike. I think it is an interesting time to be looking at gold more generally. Some quite interesting valuations. I think Condor looks like it's a good valuation, and interesting to see so many of the management owning such a big proportion of it. I think on balance, I would probably be tempted to go with Brad and to go with Scottie. I think earlier stage sounds quite interesting. Would be interesting to see a bit more about the geological side there, but I thought for the valuation and some of the program and plans, I would probably go with that at this stage.
Okay, so that's $1 million for Scottie. Okay, and the offer of free fresh fish, I guess.
And some fish. I quite like the fish. Yeah.
Yeah. So, Michael, I don't want to put too much pressure on you, but it is now all down to you. Michael,
yeah, and I'm going to screw everybody up. They're all good stories. I mean, really, really good stories, and each of them has a powerful case to be made for it. But I have followed the Condor story for a number of years and have liked it for a number of years. And given how far it's come in that period of time, and how the value has not come as far as the project has, I put my whole million in Condor.
Okay, thank you very much for that, Michael. So we have a tie, and the tie is between Brad Rourke of Scottie Resources and Derek White of Ascot Resources. So well done to the both of you. But to us, I'd really like to thank all four contestants and also all four judges today. I know it's not easy presenting your mining story inside 3 minutes. I was saying before the recording started, I would really struggle to encapsulate a mining company's sort of success and why to invest inside 3 minutes. So I think all you did tremendously well. Many thanks to our four investors for asking some really good and pertinent questions. I hope that everyone watching really enjoyed it, found it both informative and educational, and we look forward to seeing you at future Minds and Money online events. This is me, Andrew Thake, from Minds and Money.